Hello, today we are solving October 2022 IAL Unit 2 question number 3. A junior accountant has drawn up the draft of the operating activity sections for the statement of cash flow according to IAS 7. You are the chief accountant and notice that there are errors in the draft. The correct draft statement of cash flow is shown below. Okay, this is a incorrect draft statement of cash flows is shown below. This is what has happened for the cash flow. So this is incorrect because there has been certain changes. Then the extract from the financial statement of position for the last 2 years which are correct is shown below. This is the extract. Now he says additional information has taken place and that's why you need to correct that, okay, above one. So now they have given. Now the first part of the question is prepare the property, plant and depreciation provision for the depreciation account. Need to prepare the property, plant and equipment's provision for depreciation, that is depreciation provision for depreciation account we need to prepare. So let's prepare it. So here for that we can see that there has been some property that has been sold. So on 30th April 2022, plant that cost 648,000 with the depreciation to the date of 265,000 was sold for 311,000 pounds. And on 30th May 2022, property that cost about 999,000 with a net book value of 780,000, it was sold for 935,000. So this is about the properties information that we need. Okay, that has happened. Some transactions have happened and therefore there will be changes to the provision for depreciation account. Now we can see already there is a beginning and ending balance for the provision for depreciation. Here it is given. Okay, it is already given here. So the beginning balance as on 30th September 2021. So what was the beginning balance? So the beginning balance we have to start on the credit side. Why? Because it's a provision for depreciation account. It's like a liability account. Okay, so 30th September balance, 30th September 2021, or I can say that 1st October 2022. Okay, 1st October 2022, the balance brought down was the balance brought down was equal to so here it is given 2897,000. So let's write it 2897,000. okay, and then at the ending balance it is also given ending balance was 266,000. So on 1st, let's write on 1st October 2023, this balance brought down has become equal to 2766,000. okay, so this will also be the balance carried down, okay, on the carried down as on 30th October, okay, as on 30th September, okay, 2022. 30th September 22, okay, end of the financial year. The balance brought down, okay, the balance carried down will be the same here. Okay, on the opposite side you will enter. Now the remaining transactions we have to fill in and transfer it to the statement of comprehensive income or the income statement. Okay, we have to transfer whatever the thing, okay, whatever the transaction has happened, account it and transfer it to the income statement. So we can see that here for the first one we can see that what is the provision we have to include, okay, what is the provision we have to remove. This is a beginning provision. Any provisions removal due to the disposal you will enter on the debit side, opposite side, okay. So now we can say that here the cost of this equipment was 648,000, but depreciation, total depreciation was 265,000. So we already have directly. So the one that was sold on 30th April 2022, the first equipment, okay, depreciation, accumulated depreciation, okay, is already directly given. It is equal to 265,000. So you can write it just like that. Then on the 30th of April. Now next one, on 30th May 2022, what was the depreciation amount we have to calculate for the equipment that was sold? So let's calculate the accumulated depreciation. So here he says that the cost, so the general formula you should know. So what is the general formula from the net book value to calculate depreciation? So we know that net book value of any equipment, okay, or the property is equal to the cost minus its accumulated depreciation, okay. So total accumulated depreciation over the year. So the accumulated depreciation is going to be equal to cost minus the net book value, okay, the net book value of the thing. So from this let's calculate. The cost was 999,000 pounds, okay, it was 999,000 pounds and its net book value was 780,000. So which will give us the depreciation amount that is going to be equal to 219,000, okay. That's the depreciation, accumulated depreciation of the sold asset, okay, which was sold on 31st May. So let's include it here. So it is 219,000, okay. Now we have those are the two transactions that has happened. So now let's calculate the total. So 265 plus 219 plus 2766, that is going to be equal to 3250,000. So 3250,000, okay. Now the total has to be the same on both the sides. So I am going to write the total on both the sides. Now the remaining you have to transfer it to the income statement. So how much will you transfer it to the income statement, okay. We have to calculate. That happens on the 30th September 2022, okay. I am going to transfer that. So the income statement is going to be 3250 minus, okay, 3250 minus 2987. So for the income statement, I am going to calculate using like this. This is the total, 3250,000 minus 2987,000, because the balances have to be the same on both the sides. So the difference here is going to be equal to 263,000. So this much amount I will transfer it to the income statement. So 263,000.